Alright, hi everyone. Welcome to today's pre-market live analysis session brought to you by IC Markets. Alright, trust you've all had a great weekend. Right, so before we begin today's webinar, please take note of the disclaimer. Take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry significant risk to your capital, and you should only trade with money you can afford to lose. Right. My name is Ketan Rameshchandra, and this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look at what's coming up on the economic calendar for this week. Right, there's quite a few things going on. We've got an interest rate decision by the RBA. That's on Tuesday, 20th of May. And then on Wednesday, we have consumer inflation data out of the UK. And then on Thursday, 22nd of May, we've got various flash PMI reports for the Euro area, the UK, and the US. Right, so this is the calendar for this week. And take note, the time displayed here is on GMT time. So beginning tomorrow, tomorrow, Monday, 19th of May, right, we have industrial production and retail sales figures being released for China. And then on Tuesday at 4:30 a.m. GMT time, the RBA is widely expected to make a 25 basis reduction to its official cash rate. Right, at the previous meeting, which was in April, I believe, right, they maintained rates at 4.1%, and this time round they're looking to move ahead with a 25 basis points reduction. So take note, do look out for RBA Governor Michelle Bullock's press conference, and that begins at 5:30 a.m. GMT. Later on that day, on Tuesday, we've also got consumer inflation data out of Canada, and on Wednesday, 6 a.m. GMT time, we have consumer inflation data for the UK. Right, when we look at the forecast for headline CPI for the month of April, it looks like we're seeing inflationary pressures accelerating in the UK. Right, we can see that the figures for March, we saw CPI come in at an annual rate of 2.6%, and now it looks like it's going to jump to 3.3% in the latest report. So this could function as a pretty strong bullish catalyst for the pound come Wednesday. Right, and then on Thursday, right, we have a barrage of flash PMI reports for the manufacturing and services sectors for the wider Euro area, for Germany, and for France as well. And of course, at 8:30 a.m. GMT time, the flash PMI reports for the UK will be released, and later on, for the US, it's going to be released at 1:45 p.m. GMT time. And finally, on Friday, we've got retail sales figures for both the UK and Canada coming out on that day. Alright, now with that, let's dive into the charts and trading view and begin the analysis as well. And also, do remember to smash the like button and drop any requests for any analysis that you may have in this chat box here. Right, we'll begin today's analysis with the dollar index, of course, touch on a few of the major currency pairs before moving over onto the commodities such as oil and gold, and we'll touch on the indices as well, and then we'll wrap things up by looking at crypto, looking at Bitcoin and Ethereum. Right, but let's start off first, of course, with the dollar index here, and I'm on a daily time frame. Right, so we can see here, since dropping as low as since dropping as low as 97.92 on 21st of April, the dollar index has rebounded quite strongly. Remember, since 2nd of April, right, which was Wednesday, 2nd of April, Wednesday, which was Liberation Day, right, this was the date where the US had announced levies against its major trading partners, like huge levies against its major trading partners, which injected higher volatility into financial markets. Right, we saw financial markets fall, financial markets in turmoil. Right, we saw the VIX accelerate, we saw global equity markets sell off, we saw the US bond markets selling off as well. Right, and the dollar was not spared either. Right, we saw the dollar tank over this period as well. The dollar was already getting weaker. Right, we saw demand for the dollar already start to wane since mid-January. Right, so we can see here, just in April alone, right, just in following Liberation Day, since Liberation Day, we saw the dollar index fall over 6%, right? And if you look at it since mid of January of this year, from peak to trough, we've seen the dollar index lose over 11%. However, right, since the third week of April, we've seen the dollar index rebound as high as 3.9%. Right, last week we saw demand for the dollar start to dissipate once more. Right, after briefly almost hitting the level at 102, we saw the dollar index pull back quite sharply on Tuesday, and then from Wednesday till Friday, it was just hovering roughly around 100.76. Right, so after a very strong rebound, by Monday 12th of May, right, we see that the dollar index lose steam once more. Right, we could perhaps see this index drift towards the pivot. Right, the pivot at 100.17 has been identified as a pullback level. Right, the pivot at 100.17 has been identified as a pullback support level. Right, this was previously a resistance, and it's also a level that's accompanied by Fibonacci retracement at 50%. We began this retracement from the swing low on 21st of April and ending with the high here on the 12th of May. And we can see the 50% retracement aligning pretty well with the pullback level, which is the pivot. And we can also see the 78.6% Fibonacci retracement sit just underneath the swing low support at 98.94. The swing low support at 98.94 is been labeled as the first support. Now we can also see that the dollar index continues to trade underneath the red Ichimoku cloud, which highlights the ongoing overall bearish momentum, right? However, I would just like to point out as well, there's a pretty decent descending trend line that has been taken out as well, right? If we look at this descending trend line, right, there's a pretty decent descending trend line beginning from 26th of March, right? We can see the dollar index running into resistance against this descending trend line from the end of March till the second week of April. However, we saw the dollar index break above or break out of this descending trend line on 8th of May, right? In the second week of May, we saw the dollar index break out of this descending trend line, right? So we are quite, with this breakout taking place, right, perhaps there's still a little bit of upward momentum for the dollar index. However, after last week's consolidation, pullback and consolidation, we could see the index drift lower towards the pivot, stabilize around this level before making a minor rebound. Right, so take note, right, although the dollar index has rebounded quite strongly since 21st of April, and also after breaking out of this descending trend line on the 8th of May, right, despite a pretty strong rebound of nearly 4%, overhead pressure still remain for this index here, right? The dollar still remains under pressure, and that's also highlighted, of course, by the red Ichimoku cloud, right? So these are the and in terms of resistance, right, looking at the level of 101.78, we have a pretty significant overlap resistance, right? This was previously functioning as resistance in early September and mid-September of 2024, and then coming back to this year, right, rewinding a little bit in the first week of April, we can see this level functioning as pretty decent support. So this creates a very nice overlap level, and then of course after breaking under the overlap on 10th of April, this level could function as a nice resistance, and that's what has happened on Monday 12th of May, just last week, right? So we saw this overlap level at 101.78 functioning as a pretty strong barrier. So that created this overlap resistance, which we can identify as, or which we can label as the first resistance, right? With the overlap barrier at 101.78 is identified as an overlap resistance and also labeled as the first resistance. Now, we've also run a Fibonacci retracement from this downtrend here, right? There's a downtrend that begins from, there's a downtrend that begins, where's my, right, there we go. There's a downtrend that begins from the swing high on 26th of March, ending with the swing low on 21st of April. When we look at the 61.8% retracement, right, when we look at the 61.8% Fibonacci retracement, it sits pretty close to the overlap level at 101.78. So this is a pretty strong resistance barrier, right? There's an overlap resistance at 101.78. We've got the 61.8% Fibonacci retracement, and of course we've also got the red Ichimoku cloud. Three factors identifying a pretty strong overhead barrier. Right. Hi Shal, hi TY, hi everyone, great to see you tuned in. Alright, yeah, we'll definitely cover gold as well. We can look at gold, pound yen, and US 500 as we progress through the webinar. Alright, don't worry, we'll be starting off with dollar index, looking at some of the major currency pairs before moving over to commodities and indices as well. Right, so these are the key levels here for the dollar index on the daily time frame. Like a little bit of upward momentum for this index here, as we saw demand for the dollar return since the third week of April. However, right, some overhead pressures still remain in place for this index. All right, so now let's move on over to dollar yen. All right, let's take a look at dollar yen here, and we can see the dollar yen has also rebounded pretty sharply. Right, we can see that this currency pair lost as much as 12% since 10th of January. Right, we saw demand for the Japanese yen pick up very strongly over this period, and that of course is going to drive dollar yen lower. Right, after dropping as much as 12%, we've seen this currency pair rebound as much as 6.3%, right, reaching a high of 148.65 on 12th of May. Right, so just last Monday we saw the dollar yen hit its most recent high. However, right, we saw demand for the dollar lose steam last week, right, and that has of course caused the dollar yen to pull back quite sharply. Right, it has also broken through what I would label as a pretty decent pullback level. Right, there's a pretty decent pullback support level at 145.87. Right, we can see that previously this level functioning as resistance here on 2nd of May, right, and then functioning as pretty decent support on 13th of May. So we had a pretty decent pullback level here, right, but it looks like that level has given way, and we could see dollar yen drop lower. Right, we can see the dollar yen slide lower. It closed at 145 point. It closed at about 145.60 last week, and with of course if you're expecting the dollar to remain under pressure, so if you're expecting dollar index to slide lower, right, we can also expect, right, dollar yen to be moving in the same direction. Right, so if we do see demand for the dollar continue to remain weak as markets open today, right, as markets will be reopening very shortly in about 45 minutes, right, we can also expect dollar yen to drift lower, slide lower towards what I see is a swing low support. Right, there's a significant swing low support that was formed on 6th and 7th of May at 142.40. So this is where the pivot has been identified. So take note, the pivot is a swing low support level. Now slightly below, we've got a very significant major support barrier, support zone at 140.60. Right, we can see that previously, even back in September of last year, this level functioned as a very strong support. We saw a lot of bids for the dollar yen come in around this level, and it's something that has played out once more, right, as the dollar yen fell sharply towards 140.50 in the third week of April. This currency pair managed to stabilize as we saw demand for the dollar pick up around the same zone as well. So we've got a very strong support zone at around 140.60, which is where the first support has been identified. Right, on this uptrend here that begins from 22nd of April, right, we can probably run a Fibonacci retracement as well from this swing low on the 22nd of April, going up to swing high on the 12th of May. Right, looking at all the fibs, let's take a look at all the fibs. Right, we can see, okay, none of the Fibonacci retracements sit close enough to the pivot, so that's fine. Right, there is a 78.6% sitting just underneath it, but I think that sits a little too far. That's fine. Remember, don't force the Fibonacci levels onto the analysis if it doesn't sit close enough to the predefined support or resistances. Right, however, when I look at the swing high resistance here on 12th of May, right, I can see that the 78.6% retracement sits close enough to this level here. We found this retracement beginning from this swing high on 28th of March, ending with a swing low on 22nd of April. And we can see the 78.6% Fibonacci retracement sitting pretty close to the swing high resistance that was formed on 12th of May, which has been labeled as the first resistance. Alright, okay, so we've touched on dollar yen. Let's take a look at cable, right? Let's take a look at cable, right? Otherwise pound dollar, right? So if you're expecting weakness in the US dollar, right, and we can expect this currency pair to continue to climb higher as well, right? We can see that last week, or rather in the second week of May, we saw this currency pair stall at 1.3370, and since then it's failed to break above this level here. We can see it did attempt to climb above 133.70 on Wednesday, 14th of May. However, it got rejected once more. So we can see a pretty decent resistance barrier at 133.68, which has been identified as the pivot. So take note, the pivot is is a resistance barrier that's also accompanied by a Fibonacci retracement at 78.6%. We found this retracement beginning from this swing high on the 28th of April, going down to the swing low here on the 12th of May. Right. So once again, if you're expecting the dollar weakness to kick off the week, to kick off the brand new trading week, so that means dollar index should be sliding lower, along with dollar yen, right? That would mean we could see cable push a little bit higher as well, right? We could see cable push a little bit higher, rise up towards the pivot at 1.3368, and perhaps stall around this level once more. Higher up, we've got a very significant swing high resistance that was formed on 28th of April here at 1.3442. Now, if I were to stretch this level all the way back to September of 2024, right, we can actually see this is actually a pretty decent multi-swing high resistance, right? We can see here back in September of last year, as cable rose sharply, it hit as high as 1.3440, right, approximately, right, 1.3440, before reversing to stage a very strong bearish reversal. And once again, as this currency pair rallied strongly at the end of April, it stalled at the prior resistance as well, pretty much at the prior resistance, but this time breaking slightly a little bit higher before stalling and pulling back over the last couple of weeks. All right, since May, we've seen cable retreat away from the first resistance, which is almost like a nice multi-swing high resistance. Right, so we've got two decent resistance levels, right? We've got the pivot, which is a resistance at 1.3368, accompanied by Fibonacci retracement at 78.6%, and we've got of course the swing high resistance here that was formed on 28th of April. Now, in terms of support, right, when I look at the chart on 3rd of April, right, we can see a pretty decent resistance barrier being formed here, right, as cable was rising sharply, right, since mid-January. It hit a high of 1.3206 on 3rd of April before reversing on 4th of April at around 1.3100. So pretty decent resistance barrier here, which finally got taken out, and what was previously a swing high resistance could now function as a pretty decent pullback support level. So that's how the first support at 1.3100 has been identified as a pullback level. That's also accompanied by a Fibonacci retracement at 50%. So this retracement level was found beginning from this swing low here on 7th of April, going up to the swing high on the 28th of May, and the 50% retracement sits just underneath the first support. And of course, we can see that this currency pair continues to trade above the green Ichimoku cloud, right, which highlights the ongoing overall bullish momentum here. Of course, we're seeing some consolidation, right, after hitting a high of 1.3444 on 28th of April. We've seen this currency pair pull back, and it's sort of like consolidating between 1.3200 on the lower bound and around 1.3400 on the upper bound here, right? Some consolidation going on between these two levels for cable. All right, okay. Since we've touched on cable as well, let's take a look at pound yen. Right, there's a request by Shal for pound yen as well. So let's bounce on over to this currency pair, right? And we can see that for pound yen, after rebounding very strongly, right, since 9th of April, right, we've seen this currency pair rally as much as 6.5%. However, it looks to have stalled last Wednesday and pulled back quite sharply. We've seen now this currency pair drop as much as dropped as much as 1.7% last week. Now, it's fallen towards what I see is a pretty decent pullback level here. Right, previously this level at 199.35 functioned as a pretty decent swing high resistance on 2nd of May, and after breaking higher as well, this level could function as a pretty decent pullback level, right? However, we're looking for after seeing pound yen being sold off quite sharply since Wednesday, we may have a potential bearish breakout opportunity through the pivot here, right? So if we, because remember we are also expected to see dollar yen drift lower, right? So if dollar yen is drifting lower, it signifies higher demand for the Japanese yen, and that would also probably mean the other yen crosses such as pound yen are likely to drift lower. So if you're expected to see demand for the Japanese yen increase or demand for the Japanese yen continue to increase since this week, right? We've seen, remember last Wednesday we saw demand for the yen pick up quite sharply, and if that demand continues into this week, right, we can expect this currency pair pound yen to continue to slide lower. So what we've got here is a potential bearish breakout opportunity for this currency pair through the pivot at 193.35. First resistance, of course, it's a swing high that was formed on 13th of May, and in terms of support, right, it's a pretty decent swing low level here, right, almost like a double bottom here at 190.34. So that's how the first support has been identified, and it's also a level that's accompanied by a Fibonacci retracement at 50%. Right, so this is where we can identify a pretty decent take profit target for pound yen. So if you do see this bearish breakout materialize over the course of this week, right, if you do see the bearish breakout materialize this week, we can target close to the first support as a potential take profit target area, right? It's a multi-swing low level that's accompanied by Fibonacci retracement at 50%. Of course, we found this retracement beginning from this swing low on 9th of April and going up to the swing high on the 14th of May. Right, so these are the key levels here for pound yen, and also take note, right, there's a pretty decent ascending trend line as well, right? We've got a pretty decent ascending trend line for this currency pair, and if this trend line gives way, right, if we do see pound yen break through the pivot and of course break through this ascending trend line, we are very likely to see the downfall pick up or the downfall accelerate, right? Remember, this has been a pretty significant ascending trend line that has been in place since 11th of April, right? We can see pound yen bouncing off this ascending trend line several times from 11th of April all the way to as recently as 6th of May. However, if this trend line fails to hold or support pound yen, right, we're likely to see the downside accelerate even further, and if that bearish breakout does materialize, we can target close to the first support at 190.34 as a potential take profit target zone here. Alright, so now with that, let's move on over to the commodities. Let's begin with crude oil, right? XTI USD is the instrument that tracks the WTI crude oil futures, and we've seen this commodity tank since 14th of June. Remember, 15th of January, right? 15th of January is when WTI oil made this year's high at around $81 per barrel, and since 20th of January, right? 20th of January was US President Trump's inauguration, right, into the White House, and since then, after announcing his energy policies, right, his policy to expand oil and gas production in the US, we've seen this commodity come under significant overhead pressures, right? If the US, right, is planning to ramp up production capabilities for oil and natural gas, right, that would mean, of course, more supply coming into the market, and with demand for crude oil and other energies being relatively weak as well, that has caused this WTI oil and Brent oil to fall very sharply. We've seen this commodity XTI USD, right? This is the instrument that tracks the WTI crude oil futures. We saw this instrument dropped well over 32%, right, from peak to trough. We've seen it drop as much as 32% on 9th of April. However, since then, we can sort of see that WTI oil prices have been ranging sideways, right, approximately being restricted to the upside at around $64.50 per barrel on the upside, and being supported around $56 per barrel on the lower bound here. And we've also seen a pretty strong rebound since 5th of May, right? Since 5th of May, we saw WTI oil rebound as much as 14%, or rebound over 14%. However, last week, right, we've seen this commodity pull back once more, right, due to oversupply concerns, right? When we looked at US inventory levels that were reported last week by the API and the EIA, we've seen inventory levels continue to build higher, right, build higher than expected, and that has raised oversupply concerns once more. Remember, rising inventories in the US signals weaker demand, and weaker demand combined with uncertain economic outlook is going to weigh heavily on oil prices. So that's why we saw crude oil prices. Part of the reason we saw crude oil prices pull back very sharply on Wednesday and Thursday last week before stabilizing on Friday to close at around $62 per barrel. Right. However, this commodity continues to remain under pressure, and we could see it slide down towards the pivot here. The pivot is a pretty decent overlap level at $59.70. And we can see here support being formed in mid-April, and then we see resistance being formed here in the first week of May, creating a pretty decent overlap at 59.70, which we can label as the pivot. Right, the pivot is an overlap support accompanied by a Fibonacci retracement at 50%. Right, we found this retracement beginning from the swing low on 5th of May, going up to the high here on 13th of May. Right, and in terms of resistance, there's a very significant swing high resistance that was formed around $64.25 per barrel, formed here on 23rd of April. And we can also see that this swing high resistance is accompanied by Fibonacci retracement at 38.2%. Of course, we found this retracement beginning from this swing high on 15th of Jan, going down to the swing low here on 9th of April. And of course, in terms of support, we have a very significant swing low that was formed here on 5th of May at around $56 per barrel, and that's where the first support has been identified. Alright, there's a question by Public Anatomy as well. What if markets open on a huge gap like the previous Monday and open as well? So, alright, good question. Let's see. Let's go back to, alright, let's look at gold as well. Let's see. So when we saw Monday, right, we can see here. Monday, we've seen gold prices, or spot gold, open at around $3,293 per ounce, right? This was after closing at $33,337 per ounce last Friday, right? You can see here this gap has not been filled, right? We've seen, like you said, as Public Anatomy has mentioned, right? We've seen a nice big gap being created here on gold, which has not been filled, right? So if we do, for now, right, I suppose as of now, right, we've seen right, to get a good idea of what sort of the overall risk sentiment is like over the weekend, we've seen Bitcoin consolidate at around 104,000. We've also seen Ethereum pull back quite sharply, so that looks to be some risk of sentiment coming into the week, or as we begin trading this week, right? Remember, crypto markets continue to trade over the weekend, and we've seen both Bitcoin and Ethereum stall at their respective levels and start to pull back, particularly more for Ethereum, right? And usually the crypto space gives a pretty decent idea of the level of risk on environment that we can expect. So if you're seeing crypto prices sort of consolidate and begin to pull back, right, that may give us a slight sense of the overall level of risk that we can expect for this week, right? So we probably can expect a little bit of we can expect some Bitcoin and crypto and Ethereum to pull back this week. That would also likely mean we'll see demand for the Japanese yen pick up. Remember, if we see a risk off environment, we're likely to see demand for the franc Swiss franc, and demand for the Japanese yen pick up, and that would mean these respective currency pairs are likely to drop lower, along with pound yen as well. And if we are seeing some sort of risk of environment or risk of sentiment, that could mean we are likely to see demand for gold pick up, right? Demand being gold being another safe haven asset, we may see gold prices being supported this week, right? So despite seeing a large gap last week, right, we've not seen this gap being filled, right? So take note of that. This gap has not been filled, and well, we don't really know whether there could be another big gap or not, but nevertheless, right, we could probably see gold prices being supported this week, right? We can see here since 6th of May, right, since 6th of May, gold has pulled back as much as 9%. This is a pretty strong correction since the second week of May, right? And after hitting its intraday all-time high on 22nd of April at around $3,500 per ounce, we can see gold prices have pulled back quite sharply. It's sort of consolidating. Right? You can see gold prices are approximately consolidating around $3,430 on the upper bound, and of course around the pivot at 3,132. So it looks to be consolidating or trading sideways between these two levels since 6th of May. Right, but we've seen gold prices stabilize at around $3,130 per ounce last Thursday, 15th of May. This is actually a very nice pullback level previously, right? We can see that this level functioned as strong resistance back in the first week of April, and then after breaking higher on 10th of April, this level is likely to function as a pullback support level, which is what had happened very nicely on Thursday, 15th of May. So as gold prices bounced off the pullback, which is the pivot level last Thursday, it creates a very nice overlap level here. So $3,132 is a very significant overlap support that's accompanied by Fibonacci retracement at 38.2%. So that's how the pivot has been labeled, right? And of course, the 38.2% retracement was found beginning from this swing low on 14th of May and ending at the swing high on 22nd of April. Right, so we've seen gold prices stabilize last week or towards the end of last week, right, on Thursday and Friday at around $3,170 per ounce. And if we see further risk of environment, we could see demand for this precious metal pickup, and that would mean we could see a nice rebound of the pivot and see continuation to the upside. We could see gold prices continue to grind higher. Remember, on the daily time frame, we can continue to see that it trades above the green Ichimoku cloud, which highlights the ongoing bullish momentum. And at the same time, I think we have a pretty decent ascending trend line as well, I guess, because we have a pretty decent ascending trend line as well here. Okay, maybe this is not the strongest trend line because we've only seen 2 touches of the ascending trend line. I like to see at least 3 or 4 touches of an ascending or descending trend line to give us a sense of the strength of this level here. But this is a pretty weak ascending trend line that's currently in place as well. Right, in terms of resistance, first resistance is very clear. It's a multi-swing high resistance at 3,430. Right, the first swing high resistance was formed at the intraday all-time high at 22nd of April. Then we see a much more definitive swing high resistance at around $3,426 per ounce. In terms of support beyond the pivot, right, remember the pivot at $3,132 per ounce is an overlap level accompanied by not 1 but 2 Fibonacci retracements. We have the first retracement at 38.2% and the second retracement at 61.8% was found beginning from this swing low here on 7th of April, going up to the swing high on the 22nd of April. Now below that or beyond the pivot, we have another overlap level at 2,954. Once again, previously this level functioned as a pretty significant swing high resistance at the end of February, and after breaking higher, right, in 14th of March, this level could function as the pullback level, and that's what had happened very nicely on 7th of April. We saw gold prices stabilize above the pivot here, above the prior support, creating a very nice overlap level. So first support at $2,954 per ounce is an overlap support that's accompanied by Fibonacci retracement at 61.8%. Right, so if we see a risk of environment this week, right, we could see demand for gold pick up once more, right? Remember, gold is a safe haven asset, right? This precious metal is a safe haven asset, along with the Japanese yen and Swiss franc, right? And if we see a more broader risk of sentiment, we could see demand for the Japanese yen pick up. That would of course mean dollar yen and pound yen sliding lower. We could also see, of course, demand for the Swiss franc pick up. That would be this currency pair drifting lower as well towards its pivot. And also, ultimately, we may see bids for gold come in, right? We may see bids for gold come in and push it higher. Remember, right? We've got this gap here as well that's not been filled. Right, we've got this gap here between $3,330 and about $3,290 per ounce. This gap has not been filled, right? So if we do see a nice rebound in gold prices, we could eventually see this gap being closed this week. All right, so we've covered crude oil and gold as well. Let's move on over to the indices. Right, let's look at the DAX first. Right, we've also got a request for US 500, so we'll touch on US 500 once we're done with the DAX, and then we'll move on over to crypto. All right, so DE40 is the instrument that tracks the DAX futures, right? And we can see the DAX has been on fire, right, since the 2nd of April, right? After breaking the previous intraday all-time high. Where was the previous intraday all-time high? Right, the previous intraday all-time high for DAX was formed on 18th of March, and of course following Liberation Day, right, we've seen this index or this instrument lose as much as 19%, almost falling into bear market territory. Right, we saw the DAX fall as much as 18,780, but since then this instrument has rebounded very sharply, rallying as much as 27% over the last 3 weeks, right? Over the last 3 to 4 weeks, rallying as much as 27%, right? So it's made its new intraday all-time high. So take note, the latest intraday all-time high for the DAX was formed on Monday, 12th of May, and that level is at 23,917, right? After breaking out of the prior high, right? Remember, we had a swing high resistance being formed here on 6th of March. Another swing high resistance being formed here on the 18th of March. This level previously functioned as a very strong multi-swing high resistance, and we can see that resistance taking place here in the second week of May as well. And then after breaking higher on 9th of May, this level looks to have functioned as a pretty decent support zone here. So what we have is at 23,352, which is the pivot, right? The pivot is a pullback support level, right, which is where we've seen the DAX stabilize last week. Right, so we could see a nice continuation, right? If we see the DAX continue to remain above the pivot at 23,356, right, we could see it at least make another second attempt towards the intraday all-time high, which is at 23,917. Now, beyond the intraday all-time high, to identify a potential resistance barrier, we've relied on a Fibonacci extension at 127%. So this extension level was found beginning from this high on 18th of March and ending with a swing low on 7th of April. So we can see the first resistance has been identified at the extension at 24,749. Now beyond the pivot, right, remember the pivot is now a pullback support level, right? Beyond the pivot, we have another pullback level at 22,533. This level as well previously was a little bit of a resistance barrier here in the second week of April, and of course after breaking higher on 2nd of May, right, this level can now be another potential pullback support. That's also accompanied by Fibonacci retracement at 23.6%. Now this retracement level was found beginning from this swing low, of course, on 7th of April, going up to the intraday all-time high on 12th of May. Right, so we are seeing very strong upward momentum for the DAX, right? We've seen very strong upward momentum for the DAX. However, it looks to be stalling at around the intraday all-time high last Friday, right? It made a second attempt to breach the intraday all-time high last Friday, but it looks like it's running out of steam once more. So we could see it drift towards the pivot at the beginning of the week, and if we can stay above this level here, we could see a nice resumption of the uptrend. Alright, now let's move on over to US 500. Alright, most welcome, Shal. Alright, and alright, great to see you as well, Party Grandpa. Great, thanks for tuning in. Right, so looking at US 500, right, this is the instrument that tracks the S&P 500 futures, right? We can see very strong upward momentum for this instrument as well, right? We can see the US 500 briefly falling into bear market territory, right? Since its intraday all-time high that was formed on 19th of Feb at around 6,147, we've seen this instrument drop as much as almost 22% on Monday, 7th of April, right? Briefly entering bear market territory before stabilizing around 4,963, right? And since then, right, we've seen this instrument rally as much as 24%, a very strong rebound over the last 3 to 4 weeks here. And the upward momentum still looks to be pretty strong, right? We can see that this level at 5,778 previously functioned as a very significant swing high resistance. It's almost like a very significant overlap level if you look at it, right? If I were to stretch it back all the way till right, approximately like this, if I stretch it all the way back to 13th of Jan, this looks to be a very significant overlap level, right? Previously, we can see a swing low support, very significant swing low support taking place here in mid-Jan. We also see a little bit of consolidation here in the first week of March. Then we see a very significant swing high resistance being formed here on 26th of March. This creates a pretty significant overlap level where we saw a breakout take place last Monday, 12th of May, right? We saw a huge gap in equity markets, right? And then we in the futures as well. And then we saw that rally continue before sort of running out of steam last Friday, right? We've seen a very strong rebound in equity markets, right? US 500 and the DAX rebounding very strongly last week, but more for the American equities, right? American equities rebounded much more stronger than the European counterparts in general. Right, so the pivot is an overlap support, right? We can identify the pivot as an overlap support, right? So we could see US 500 pull back a little bit. Remember, it looks to have faded last Friday, and if we see a broader risk of sentiment to kick off the brand new trading week, we could see equity markets pull back as well. So that means we could see the US 500 drift a little bit lower, maybe drift as low, pull back as much as 5,773, right? Pull back towards 5,573, where the pivot sits. The pivot is an overlap support. Now beyond the pivot, there's another pretty decent support area at 5,586, right? We can see some consolidation, some support take place around this level here, and we may even have a Fibonacci retracement. Let's try it out. Let's run the first retracement from this swing low on 7th of April, going up to the high on 16th of May, Friday, right? In this retracement here, we see, right, none of the retracement levels lined up close to the pivot on the first support. That's fine. Let's try another retracement, this time beginning from this swing low on 21st of April. And in this case here, we can see the 23 and 13.2% retracements sit pretty close to the pivot and first support respectively. So let's keep these two levels on, and we can highlight a pretty decent support zones here for the pivot and the first support as well. Right, in terms of resistance, I see a nice overlap at pretty much at 6,000. Right, we can see some support taking place here in mid-February, and then we can see resistance here at the end of Feb as well. So this creates a pretty decent overlap level, which we can label as the first resistance. So we could see US 500 drift lower this week, possibly falling as much or pulling back under 5,800, where we have the pivot, which is a significant overlap level, accompanied by the Fibonacci retracement at 23.6%. Right, there's still a nice overlap barrier here, right? Overlap resistance barrier at 6,000. And let's see maybe if there's any Fibonacci extensions that we could use. Let's just try it out. Right, key extension levels sit at 127 and 161%. Right, the extension at 137% sits pretty far from the first resistance, so that's fine. I don't think this extension is necessary, so let's just remove it. Alright, so take note, we are seeing very strong upward momentum for US 500, especially last week after this big gap here. Remember, there's a big gap here as well. For US 500, we saw a very strong rally for this instrument before we see it sort of run out of steam last Friday, 16th of May. Right, and we could see equity markets pull back slightly as we begin the brand new trading week. Alright, so that's US 500. And okay, and as we come towards the end of today's webinar, right, if you have any other requests, please do drop your requests in the chat box here. I'll be more than happy to go through the analysis with you. Otherwise, we're going to wrap things up with Bitcoin and Ethereum. Right, if you have any other requests for any of the other instruments, any of the other commodities, indices, or the currency pairs, do drop them in the chat box here. Otherwise, we're going to wrap things up with Bitcoin and Ethereum. Now remember, crypto markets are still open over the weekend, right? Crypto markets and exchanges are open, and they continue to trade, and they give us generally a good sense of what to expect for the following week, right? They can be Bitcoin, especially Bitcoin, can give us a good sense of the type of risk on or risk off environment that we can expect as we begin the brand new trading week. So we can see here for most parts of last week, right? After climbing above the level of 100,000, Bitcoin has sort of floated around 104,000, right? After a very strong rally, is floating around or consolidating around 104,000 for most parts of last week and over the weekend as well, right? Just on Sunday, after briefly climbing above 106,000, it looks to have fizzled out around this level and looks to be pulling back as well. So if crypto is pulling back, right, it gives us a sense, especially if Bitcoin is pulling back quite strongly this week, or if it continues to pull back much more strongly, it can give us a good sense of the type of environment that we can expect for this week, right? So in terms of pivot, right, we could see, because we also continue to see very strong upward momentum, we could see Bitcoin continue to climb a little bit higher, climb towards what I see is a multi-swing high resistance at $108,391. The pivot is a multi-swing high resistance, right, with the first swing high being formed on mid-December of last year, and of course the second swing high resistance being formed in January of this year, right? Remember, the intraday all-time high for Bitcoin was formed here on 20th of Jan, and it's at 109,547. So we could see this coin continue to drift a little bit higher as well, right? And especially if we can break above last week's high, right? If we can break above last week's high at 105,836, we could see Bitcoin grind higher towards the pivot, which is the multi-swing high resistance. Beyond the pivot, right, we've identified the first resistance at 190,108. This is a level that's identified by a Fibonacci extension at 137%. Remember, remember the intraday all-time high for Bitcoin was formed on 30th of Jan, and that's around 109,000, and there's no other level that we can reference beyond this swing high resistance. So we've relied on a Fibonacci extension at 137% to help us identify the next potential barrier. So this extension was found beginning from the intraday all-time high on 20th of Jan, going down to the swing low here on 7th of April. Right now, in terms of support, right, the first support has been identified at 98,383. This is a pullback level here. We can see that previously this level functioned as pretty decent resistance from 10th of Feb till the 21st of Feb, and we can even argue here as well on the first week of May. During the first week of May, this level functioned as a resistance barrier. However, after breaking higher on 8th of May, this resistance barrier is now likely to function as a pullback level. That's also accompanied by a Fibonacci retracement at 23.6%. Of course, this retracement level was found beginning from this swing low here on 7th of April, going up to now the high on Sunday 18th of May. Right, so the first support at 98,383 is a pullback level that's accompanied by a Fibonacci retracement at 33.6%. Alright, now with that, let's move on over to Ethereum. Right, Ethereum is pulling back much more noticeably than Bitcoin. Right, we can see here after making its recent high at 2,737 last Tuesday and Wednesday, this coin has pulled back quite sharply, much more noticeably than Bitcoin. Ethereum has dropped as much as 15% since Tuesday and Wednesday last week. Right, a much more steeper or deeper pullback or deeper correction. Much more deeper correction for Ethereum as compared to Bitcoin at the time being, at the present moment. Right, so you can see here, Ethereum is falling towards what I see is an overlap level at 2,100. Right, this is an overlap support that's accompanied by a Fibonacci retracement at 50%. Right, we can see here that 2,100 previously functioned as pretty decent support in the first week of March, and after that it proceeded to function as resistance on 25th of March. This creates a very nice overlap level, which we can identify as the first support, right? Okay, or rather, the overlap at 2,100 is where the pivot has been identified as an overlap support that's accompanied by a Fibonacci retracement at 50%. Right, this retracement level was found beginning from this swing low here on 9th of April, going up to the swing high here on 13th of May. So we have the 50% Fibonacci retracement sitting well with the pivot, and we can also see the 17.6% sitting well at with 1,669, which is the first support. Now in terms of resistance, right, there's a pretty strong resistance barrier here at around 2,800, and we can see that since 6th of Feb, this level has functioned as pretty strong resistance, and we can even argue that last week, this is where Ethereum sort of stalled as well. It was rising very sharply before running out of steam close to 2,800, which is where the first resistance has been identified, and is also where a 50% Fibonacci retracement level sits. Right, so this retracement level was found beginning from this swing high on 16th of December, going down to the swing low here on 9th of April. Right, so take note, we are seeing a much more noticeable and stronger correction for Ethereum. Right, since the high of Tuesday 13th of May, it's fallen 15%. Bitcoin is holding up much better. Right, Bitcoin is holding up much better after fading at around 106,000 pretty much on Sunday. Right, it looks to be drifting lower as well. However, right, I see much more stronger bullish momentum for this coin here. Right, there may even be a pretty decent ascending trend line. Right, let me see if I can get one out. Yeah, there's a pretty decent ascending trend line that we have for Bitcoin as well. Right, we can see Bitcoin bouncing off this ascending trend line a couple of times here, and this is a key area to watch out for this week. Right, this ascending trend line is going to be a pretty important zone, right? Because if Bitcoin does break through or break under this descending trend line or this ascending trend line, right, we are likely to see it fall close towards 100,000, right? Maybe drifting, falling down as much as falling as low towards the first support. All right, hi Derek. Hi. Your question is quite generic, right? What do you mean by should I keep the market on buy still? Like which uh, uh, instruments are you looking at, right? Which asset class are you looking at? Are you talking about currencies, commodities, indices, or crypto, right? Your question is very vague. Could you specify on which asset class you're looking at? And then perhaps I could uh, provide some context and some background with regards to that. All right. Otherwise, we're coming towards the end of today's webinar. Right before we wrap things up, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and of course, do remember to smash the like button as well. All right. So I've launched the poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and of course, all right, Shal. All right, Derek, if you're talking about Bitcoin. Are you talking about Bitcoin on the 15-minute chart? All right, okay. If you're talking on if whether okay, well, first of all, well, as I mentioned, right, on Bitcoin here on a daily time frame, we can see that this is a very significant um, ascending trend line, right? Significant ascending trend line, and at the same time, I see sort of like an intermediate support level at 101,963, right? You can see here that previously this level has functioned as a resistance in the first week of Feb and is now a level where Bitcoin has managed to stabilize above since 12th of May. So we have a pretty decent overlap at 101,963, right? I would consider this as intermediate overlap support. And we have this junction here, or this intersection here, sort of a pretty decent intersection of the ascending trend line and the overlap level at 101,963. So I would say keep a close eye on this level here, because if this area here does not hold, right, if Bitcoin cannot stay above this level here, we are likely to see it drift lower and fall towards the first support, right? So that's going to be important. This area here that I've circled is going to be a pretty important support area, right, between 101,900 and the ascending trend line, right? If this level fails to hold up Bitcoin, we're likely to see this this we're likely to see it drift lower and pull back under 100,000, possibly falling under 100,000, dropping as low as where the pullback level at 98,383 sits. Looking at the 15-minute time frame, I believe that's a question. 15-minute time frame for Bitcoin, right? It has stabilized around, or is stabilized around 103,600 about an hour ago, right? About approximately an hour ago. Yeah, I guess if you've sort of like bought the dip at Bitcoin and around here, right, I would say, yeah, we can still probably hold a position. We're still trying to see a pretty decent rebound. However, if it does break under 103,600, right, this is where you should be a little bit worried, right? Especially if it breaks through the ascending trend line, which I've mentioned here as well. So take note, right? This area here, right? This area here, which is the intersection between the ascending trend line and the intermediate overlap support at 101,963. This is going to be a pretty important level here for now, right? On a 15-minute time frame, it does look like Bitcoin looks to be rebounding a little bit higher, right? But remember, at the same time, this is the zone that you want to keep an eye on. If Bitcoin fails to hold up above this level, I think we can expect a much deeper pullback or a much deeper correction. All right, great to see all the response coming in as well. Like, truly appreciate it. All right, okay, so if there's no further questions, right, thanks everyone for tuning in to today's session brought to you by IC Markets. Right, do look out for all upcoming webinars for the for this week, right? We've got a combination of educational topics and live analysis for English Thai, and Bahasa. So do look out for all these webinars. They're going to be taking place this week. All right, thanks everyone. Take care. Have a great trading week, and catch you all at the next session.
Thank you.